Hey guys, this is Ken McElroy, and you are listening to the Mailbox Money Show with Bronson Hill.
Welcome to the Mailbox Money Show. And if you've been following us for a while, you know that I'm all about trying to reduce taxes and structure investments well so that you don't get hit by incredible taxes. You can grow tax-free within an account or defer taxes until later. So my good friend Kaaren Hall is here today. She's with a company called uDirect IRA. And they basically, every time I talk to Kaaren, I always learn something. There's always something awesome she shares. And you may think you know everything about retirement accounts, but there's a lot of things when it comes to being taxed inside of an account. It's called UDFI or UBIT, unrelated business income tax. There's other things that go in that it's really important that you know. But Kaaren is, she also hosts a local meetup. I've been a part of the local meetup in Orange County, California, and she's really tied in with Bigger Pockets. This is her book. It's called Self-Directed IRA Investing. It just came out. So encourage you to check that out. Let's jump into this interview with Kaaren Hall. Hi, welcome to the Mailbox Money Show. Kaaren Hall, how are you?
Great, Bronson. How are you doing?
I'm well. I'm doing better as I'm talking to you. So I got to say, Kaaren, you're one of the most like positive, encouraging people I know, and just I admire how you've just really built this incredible business that really helps people. I mean, just really, I see you as somebody as you're always looking to add value. You're always looking to help. You're always trying to find a way to how can I give value, and I think that really says a lot about you. So I just really appreciate that about you. And I know we're in a mastermind group together, the Wealth Forum, and I just love that even in the group you're doing that, which is great. So I want to talk. I know you have your new book out, which I have on my shelf
Oh,
behind me
wait, you
here.
mean this one?
That one, yeah. Actually, it took like a long time to show. I think it was like you sold so many that they had to like do
Yeah,
special printings. And it was like weeks to be able to get it. So it's like I think it's trading for like 10 times as much on eBay. There's kind of a play there of buying the books and reselling.
correct.
But
Yes.
anyway, I'm excited to read it. I haven't had a chance to read it yet, but I'm very excited to read it. And I know your company, uDirect IRA, you guys talk about self-directed IRAs, you talk about solar warrant 401ks, Roth IRAs, all the things related to retirement accounts. And a lot of people think, oh, a retirement account is a retirement account, but there's a lot of nuance to it. There's a lot of different types of accounts, depending on whether you're self-employed, whether you have just a 401k and you want to roll it over. But a lot of people don't realize you can take your company 401k plan, even while you still work there sometimes, and roll it over to a self-directed IRA. And you can
Sometimes
actually
you can. Yeah.
buy, whether, a lot of times it happens automatically. You can do it when you leave the job, but even when you're still at the job, there may be a vesting period, but you can do it. So let's talk a little bit about just generally the self-directed IRA and kind of the how people are able to use that to invest in real estate and other types of assets.
It's crazy. This year is the 50th year anniversary of the
Wow.
IRA, right? So it's like Gerald Ford signed the ERISA law into effect. That's how flippin' long ago it was. So
Amazing.
yeah, and people still don't know that you can actually invest in alternative assets with this. It's
Yeah.
still a best kept secret. I was just having this conversation with someone today. Like, can you believe it? Oh, I never heard about this. Like, yeah, no,
Uh,
really, 50 years, nothing new. So yeah, so with self-directed IRAs, I mean, there's just so many different things you can do. And this has been a way for people to raise capital for a long time. And my experience is that in 2009, when I founded uDirect, people didn't have access to capital. Remember that, the Great Recession, banks kind of, they clamped down the requirements for being able to finance rental properties or properties at all. You couldn't have 10, you could have 6. And people are clamoring to find out where's the money, and we found it in this $40 trillion pool of retirement dollars, which are self-directed IRAs. So ever
wow.
since then, it's been a whirlwind ever since then.
Yeah, I love it. Well, you say too, it's really interesting because um, people we're educated today about finance really by Wall Street. And it's these big firms that, multi-billion dollar,
Yeah.
trillion dollar type firms, and they control everything. And it's interesting how we call it real estate or real assets. And these used to be the things everybody would do, especially after, we're talking 100 years ago, after the big, crash. And, they had the 89% loss of stock market value in the 30s and 40s. People say, why in the world would you ever buy stocks? Right. But now it's like people say the opposite. Why would you ever not buy stocks or not buy bonds? But the alternative world is, there's a lot, the returns are often they're better. You can see the data around it. But there's risk in every deal. There's risk in everything that you do. So I guess I'd love to touch base just on. We'll get into kind of specific assets, but I guess for your experience of seeing for someone who's maybe they're getting started and they're like, yeah, I do want to roll my account over. I've been with this company, or maybe only I've done stocks or I've done kind of traditional things. What do you see as kind of the case for alternative assets, and what are some assets that you find compelling right now?
Yeah, you bring up a good point about people not really knowing that they can invest in alternative assets, right? Because like when we're young, we get out of college maybe or school, we get a job, and then, oh, that job happens to throw in a retirement account, great. Unless we're in finance to begin with, we don't really realize that we became an investor the day we contributed to a 401k. So we just kind of fall into it. So stocks, bonds, and mutual funds, we may not begin understanding them, but once we own them, then we want to know more about them. So if anywhere you work that has an employer plan, now you're an investor. So yeah, you definitely want to know. And you mentioned if you work somewhere and you have a current plan, you might be able to move some of that into a self-directed IRA, and that's true, but not always. Typically, it has to be a previous employer plan most of the time. Yeah. But when it comes to getting into the alternative asset space, I think we all hit that aha moment. It's like, okay, now let me check the boxes. Okay, I've done this and this and this with my life. Now, what about the future?
Yeah.
And I want wealth. I want financial stability in my future, not just now, but in the future. And so you start thinking, well, what could I do to build this wealth? And this is when we start going to seminars and listening to podcasts like this one, and start really having this thirst for knowledge for what else can be done. Yeah, and that's the alternative asset space, right?
Yeah, I think that's the thing. I just was having a conversation about this with someone that, if you simply do the things that you've always done, you're just going to get a very predictable result typically, right? If we were talking about fitness earlier. If I do the same things I've always done, I'm going to get the same results. If I change my activities, I'm going to, feel differently. I'm going to look different. I have a different effect. It's the same with this as well. And I think a lot of people are just, well, I have my money person, or I do my retirement accounts, or I work this job. Well, it's like, well, that's, and for some people, that's fine. That's no problem. But if somebody's like saying, hey, I'd really like to make sure I'm in a good place. The average person, I think, has what, is not prepared for retirement, right? They're not prepared. And really, when you have resources, it really gives you more choices, especially as you get older. You're really able to have more choices. So I'm really curious, kind of behind the curtain, of what you see. You'll see the good and the bad. You guys have, I think, over $2 billion that you're involved with, that people invest with you. Yeah, exactly. So I want to see, you'll see the deals that are going bad. You'll see the deals that are going really well. And you mentioned something kind of right before we started recording, that a lot of times it has to do with the sponsor. And I think there's probably also a part of it too with how the deal's set up, because sometimes even with a great sponsor, if the debt situation was not good, or if something was not seen, especially with rates rising. So talk to us a little bit about like maybe some of the assets or the types of deals that you see have not gone well the last few years, and what do you see going well?
Well, like you say, either it's just straight up they're dishonest, or it's some sort of black swan event, like you mentioned, like the rates going up. Nobody really saw that, or we thought it might happen, but not like overnight.
Yeah, and that sharply. Yeah, it was like fastest rate increase in 45 years or something. It was crazy.
Yeah, it was. Yeah, and so what we saw at that time was a lot of capital calls. Yeah. And so people who have self-directed IRAs they always need to have a cushion of idle cash in there to make up for capital calls or any expenses. So that was one way where some deals didn't go forward, because if you couldn't make the capital call, it diluted your interest.
Yeah.
And so that wasn't great for people. But when deals really go bust, a lot of times it has to do with fraud. And I hate to say. Yeah. And we've seen it, because what was it, Dillinger or something like that, where they said, like, why do people rob banks, or why do you rob banks? And he says, because that's where the money is.
Yeah.
Same thing with self-directed IRAs. Again, 40 trillion. In the pool of retirement accounts. So this is where it happens. So what you can do is really, understand what you're agreeing to. Read the syndication agreement. Now, typically a syndication, there is no promise to repay that investment. Yeah. You're taking the risk with the GP, partner. Right?
Right.
So you really want to check out their track record. You want to go on FINRA's broker check. And you want to, type their name in there and see if they've had any other problems, talk to other people who've invested with them. I mean, you really want to do your due diligence, because, we've seen quite a number of things. Notes, one time we saw this man trying to modify a note. So he had a lot of people investing with him as note investors, and bringing in the cash that way. And so he tried to modify this note, but by writing on the front of it. I mean, he didn't even try
Oh,
to, recast the debt or anything. And he just wrote on it. It's like, who is this guy? This is,
yeah.
I mean, like like a 15-year-old child would do something like this, right?
Wow.
So looked him up on Finner's broker check. Sure enough, had a rap sheet like this long.
Wow.
And then I looked at it and there was some email from 10 years back. I found that person, emailed them. I said, hey, is this person still allowed to do business? She said no. And boom, long story short, that person isn't doing business anymore. And we were able
Yeah.
to catch that mid Ponzi is what it really was.
Wow.
Yeah.
Yeah. Yeah.
So a Ponzi scheme, if I can just add, a Ponzi
Yeah.
scheme is when a lot of times it's unintentional, though. I'll give you that. Sometimes it's when you maybe borrow from one thing, like rob from Peter to pay Paul, or you kind of mix funds and you think it's okay. It's not. So
No.
you can innocently commit a Ponzi scheme, but I don't know how innocent this guy is.
Yeah, I know it is. I just had a call earlier today with a guy. I was talking about this business deal we're buying, and this guy was saying, "Yeah, we vested with this guy. He knew him through a mastermind. The guy who ran the mastermind recommended this guy, and then the guy was just a total fraudster. He was some guy based out of Dubai or something, and it just became this, And of course, you got international and you got other things, and it's just so sad. And I think that it comes back to, and then we've had deals we've done where over 10 years of payment history, lots of, background checks, all kinds of different things. And then later a deal goes bad. And it's happened both for me as an investor as well as being a partner on things. And
Yeah.
it's so frustrating. And I think that's one of the challenges of alternative assets is that, it can be challenging to know who's legit. And I think that's a great resource, the FINRA broker check. I'm gonna make a note of that and then just start putting people through there because I think, background checks are great. I think following up with people, word of mouth is huge. I think one of the best recommends, is a long track record with someone, but even that's not always 100%. So having diversity is very important. And that's where, it is. And also for us, like we're doing a deal now where it's myself and my partner are on in the bank. Well, we're actually operating ourselves. I'm actually in the operator seat, which is different than I've done the other ones. I've done some multifamily stuff where I'm a little bit there, but I'm not like as much on the operations. And so I think that but I think all of this is it's about learning. It's about learning and growth and hopefully if you do have a loss or when you have a loss, it's not a substantial loss and that you learn something from it.
Well, and when you're investing in a syndication, you usually have to be accredited, right?
Yeah.
And the reason for that is because there is no promise to be repaid. And if you lose it, it's not going to take the bread off the table that you feed your family. It's
right.
You can kind of afford to lose it. I think when you're an investor, you have to factor in you're going to have X number of deals that don't go the way you want.
Yeah.
That's part of the risk.
Yeah, exactly. No, it's absolutely true. So I wanted to ask you a little more about just about the structure of retirement accounts. I know I've had some people that they get in a situation where maybe their financial situation changes, they need access to their money that's in their retirement account. And you'll see all kinds of things happen. So you can take it out and there's a penalty. I think it's you get the tax and you get a 10% penalty on top of it. So it's obviously not preferable. And so that's challenging, but there's a way you can borrow against this too. Right? Can you talk a little bit about some alternatives? If somebody needs liquidity instead of liquidating your account, just what are some of the alternatives they could potentially look at?
Yeah, if it's an IRA, you really don't have a lot of choices. The best you can do with an IRA is to take a 60-day loan where you can it's not really a loan like a plan loan is. I'll talk about that in a minute, but you can take the money out. You have 60 days to put it into a different retirement account before it becomes taxable. So if you just need a little money or you need the money for a short amount of time, you can do that. But if you need to borrow money from your retirement account, a 401k or an employer plan, even a solo, like a self-directed solo 401k has a provision where you could take a plan loan, right? You could take money, use it for anything you like. And it ends up being an asset of the plan because you have to pay yourself back. You pay yourself back, usually like prime plus, some kind of market rate like that. And you have to pay yourself back or your plan back over a 5-year period, either monthly or quarterly, and at least interest-only payments. So you have to pay yourself back. Otherwise, it's a prohibited transaction. That means you've received personal benefit from it. It becomes a prohibited transaction. So yes, you can borrow that money from an employer plan. Got to pay it back, though. That is the thing. So if you can't pay it back and you do just withdraw it, it's some of the most expensive money you'll ever have.
Yeah, exactly. No, and it's unfortunate. People get in situations where they need it. I know there's different exemptions and things. So what are some of the, I mean, I'm always curious too. We have this show's the Mailbox Money Show. We've had people doing all types of alternative assets from, land flipping to, I mean, you name it, coffee farms in South America or, all kinds of different things. But what are some of the interesting assets you've seen? I know precious metals is one. There's other ones that people do that are just like, oh, that's really interesting. People actually do this, right?
Well, this isn't something we would take today, but back in when I started in the Wild West days, this one young man had a Roth IRA, right? So Roth IRAs, they grow tax-free for life, right? So he took his Roth IRA, bought a couple of tickets to the Super Bowl. I don't even know if you know this, but a ticket is real estate. Did you know that?
I didn't know that.
It's a lease. It's a lease on a seat.
Wow.
Right?
So you can
So you
pay
get a
for it.
ticket with it. Yeah.
Oh, so did he flip it? Did he flip the seats or something? Or did
He
he
did.
sell to
He
someone?
did.
Okay.
And he got the money back in his Roth. Now, if he had gone to the game,
Yeah.
using that, then, if he'd
Distribution.
used them, that would have been maybe prohibited, like personal use. Yeah. But
Self-dealing.
that was kind of Wild West, I thought.
Yeah, that's interesting. I've heard stories of people. I actually loved your opinion. So somebody that was doing wholesaling was doing this as well, but that's kind of a self deal, right? If you're an account and you buy a property or you have a down payment and you make a bunch of money, let's say you get a $5,000, payment to lock up a property or something, or you borrow money, whatever, and then you give somebody some money, and then you get up, it turns into 30K or something as an assignment fee.
Yeah.
Was that considered self dealing or?
Well, I mean, it's self-dealing if you have personal benefit, if you receive some benefit. Wholesaling is kind of tricky with the self-directed IRA. It's not really meant for self-directed IRAs. But sure, I mean, you could grab a property and, you can flip, you can do those kinds of things. Wholesaling isn't really the self-directed IRA ideal
Yeah.
choice.
Right. I know there's different things out there that do it. What are some things that you see? Because I see your role as you're obviously just helping investors to kind of meet their long-term goals as well. What are some things that you see? I guess some qualities or some actions that you see savvy investors taking that are kind of different than other investors, like either on the diligence side or on the finding deals or being a part of groups, or like what are things that you see kind of the people that are really that you respect a lot? Because I have a lot of respect for you as a thought leader as well as an investor, and just I know that like what are some things that you're seeing from really successful investors?
Well, it's nothing fancy, but they do the work. That's what they do. They just roll up their sleeves and they say, for example, you've got maybe a portfolio of multifamily properties and there's a syndication into them. The savvy investor is going to look at those properties. They're going to look at the market. They're going to take a look at what is the economy of that market. What are my real risks? Not just what does it say on paper. Forget about just reading it, but let's look at the underlying asset and really take a look at that. And who actually owns that underlying asset? Whoops, does the GP actually have control of that asset? Things like this can happen. So I think the savvy investors are doing the hard work.
Yeah, exactly. And that's the thing that a lot of people are not wanting to do. They're not willing to do. And I think sometimes you've seen when a deal goes south, people start blaming the sponsor, or they'll blame different things. And it's not that, some people, it is okay to blame people, but also there's important to take a look at ourselves and what are we learning and what do we do? Or is there something that we could have done differently? And sometimes the answer is no, but a lot of the answer is yes. A lot of the answer is like, hey, I can actually do this. I can learn this. And so I think it is very important.
I call that the tuition, the tuition of life, life tuition right there when something like that happens.
Well, in my book, I talk about this and Fire Yourself. I talk about, the day I lost $70,000 doing options trading, right? Because I didn't really do the system correctly. And I learned, okay, this is not the right investment for me. I'm not the guy who works this formula. And so, I mean, very few people are great at it and they have their own way and they're doing certain types of options trading, but it's generally perceived as a much higher risk thing. I did well for a few months, but then I lost a lot of money. And so I think that's all important to consider. So let's talk a little bit about some of the changes that are coming to, IRAs, or even maybe just touch base on some of the special things about them in the sense, I know, unrelated business income tax is something people should be aware of. What are some other things people should be aware of as far as changes or just be aware of when it comes to retirement accounts?
Yeah, no changes in UBIT and UDFI, which is great. Those are two kind of like twin taxes. UBIT, unrelated business income tax, comes up when an IRA invests in an active business. And that used to be like if you're flipping a lot of properties, that was considering running an active business. And that was back in the day when you could buy properties on tape. We're in a different world now.
Yeah.
But UDFI, if your IRA takes on debt to acquire a property, say it's 30% leverage, okay? And then you get this rent check comes in, 30% of that rent check is subject to this UDFI tax. And it's the same rate as the trust rate. So it can vary between like 15 to 37%. Very expensive. Now it's not on all the money that comes in. It's not on all the proceeds, just the percentage that were acquired due to leverage. And if anybody wants to look into it, it's irs.gov, IRS's website, publication 598. But this is something like, you make me think that to say that when you're an investor, you need to have a really good, like, stable of advisors. You need to have a good attorney. You need a really good tax person.
Yeah.
And when you're interviewing them and you say, hey, do you know how to file a 990T? And they say, huh? Then you say next, and you find somebody that understands you as an investor and what your needs are, because that could happen.
Yeah. So real quick, UDFI, it is when debt is used to buy a property or business, something else. How often do you see that being triggered within? Because some people say, yeah, that happens, but it's like, well, it doesn't just actually automatically happen. It doesn't, like, do you see it being triggered frequently in deals that?
Yeah. Oh, yeah. I mean, a lot, because any syndication that's taking on debt is passing off, if an IRA invests in a syndication as an equity partner, and that GP is part of the capital stack as leverage, then whatever percentage that the IRA earns due to leverage is subject to this tax, and it'll be reported on the K-1.
Right.
So it's tricky. And a lot of people get into syndications not realizing, whoa, I've got to file a 990T. But on the reverse side of this, or I guess on another side of this, to say that a lot of times, like if it's a multifamily building, or because a lot of times it is these days, if the GP is doing cost segregation, some of those cost savings can be passed on. And this is, again, you want to talk to your tax advisor, your competent tax advisor, to say, this is what I'm doing, and tell them before you do it if you can. But this is what I'm doing, and I think I can mitigate the UDFI tax because you're going to do a cost seg, and there'll be deductions to take. And what do you think? And have your tax person give you tax advice about how to handle this.
Yeah, absolutely. No, I think you mentioned something really important, is that it really is, especially the wealthier you get and the more you have going on, the more team is so important, because you need things like asset protection. You need things like tax strategy. You need to have potentially an attorney or somebody who works with trusts or your legacy involved, because otherwise you're just going to be taxed at a terrible. I mean, I know people that are paying 60% in taxes. All the medical field, they're paying crazy amounts in taxes. There's no financial planning set up. So even if you do generate capital, you're going to have to give a lot of it back over to the government if you've developed some assets. And so, all this stuff is set up for a reason, and it's set up to really help people. There's a way to navigate it, but people that don't know or don't do the work, you can get really pinched. And that's where the education piece, I think, is so important. What's one, we're kind of wrapping up with kind of a short interview today, but in general, we don't go for too long, but what's one thing that you think, obviously you gave that tip about, for tax strategy and things like that. What's something that you think that somebody who's, hey, I know I should roll over my this 401k, or I know I should start doing more alternative assets. What's one tip that you have as far as just something individuals should do? You've given some great nuggets, but just want to see if there's anything else that people should do.
Yeah, when you are leaving a company, just know that that's your money and you can take it with you. And then you get to decide, do you want to put it in the market or do you want to put it in alternative assets? And before you put it in alternative assets, do your homework, listen to a couple of podcasts, and go to a couple events and talk to people. What are they investing in? What's their experience? And get the education so that you're really ready to make that investment. Because you don't want to do this if you're unaware, if you're not completely, feeling good about it or not educated. And that's the best thing. Just knowledge is power, I would say, when you're self-directed.
Yeah, it really is. And I think there's a huge amount to being in person and getting around other investors as well. And that's why I'm doing that. Karen's doing that as well. So anybody listening that's, hey, I'm new to this, or I will meet people sometimes, hey, I live in a remote area, I don't really live in a big city. Well, go to conferences, go to groups, go to meetups, get online, join groups, investor groups, and what you'll learn a lot. You'll hear stories. You'll hear sometimes I would say for sure the horror stories are you learn way more than from the successes. If you talk to somebody and everything's always good, it's like, maybe
Learn from someone's mistakes. Am I right?
yeah, totally. Yeah. And there are a lot of mistakes you can make. So I think it's really good to just continue to educate yourself, continue to ask questions, continue to learn. And a great way too is your book here. So I'm going to brag on you here too for your book. This is a bigger pockets guide, the self-directed IRA investing. I am excited to get it. It's not a long book, but it looks like it's got some great content here. And again, I just want to say, Kaaren, I'm really grateful for you, for your friendship. You're a part of our Group of the Wealth Forum, but also just, like I said, you're just continually finding ways to add value. You're finding ways to say, how can I help and how can I serve? And not just to me, but to everybody you come in contact with. And I think that's a great way to do business, right? You do that. And then of course, word gets out and then people start saying, how can I help you? And I think that's a great tip for everybody who's in business or anybody who's just wants to get ahead in life. If you can just try to find a way, I mean, it's been said by Zig Ziglar, you can have anything you want in your life if you help enough other people get what they want. So I want to say, I see that in you. You're definitely doing that. And it's no surprise to me how much success you're having. So Kaaren, thanks so much for being here today. How can people get in touch with you, hear about what you're doing, your book, the different things that you're involved with?
Yeah, the best way is our website, uDirectIRA.com, and hit us up at info@uDirectIRA.com, and we'll help you. You can go to our contact us page and create an appointment. And then, when it's convenient for you, we can talk to you, because everyone who's self-directing has questions and you need those answered before you go forward. So we'll always have a 20-minute consultation, free consultation with anyone who, is interested.
Awesome. Well, Kaaren, thanks for being here today. Looking forward to seeing you again soon. I'm going to see you in Scottsdale in a month for our meeting with Ken McElroy and a few other amazing, awesome speakers. So excited to see you there. But thanks again.
Thank you, Bronson.
All right. So I hope you got as much value out of that as I did. Again, lots of value there. I think some of the big takeaways for me are just continually to ask questions, to get online, to do the work, right? She talks about great investors do the work, right? They do research. They really ask the questions. They go to the properties. They look them up online. They're looking up all the different information. They're making the phone calls to check references. And these are things that they become obvious when a deal doesn't work out. And I've had deals personally that haven't worked out, right? We've invested in things that haven't worked out. So I think it's not that it will never happen. It's when it happens. And what do you learn from it, right? Going forward, and having some diversity in different types of deals, being able to really learn and grow. And then you learn, okay, I think I learned something from this and I can move forward. And so, again, we've had home runs. We have things that just phenomenally well, just, out of the park. We've had, losses, we've had challenges, we've had things that are there. And I think any investor that or even a sponsor that is not willing to kind of admit when they go through challenges, the last 2-3 years have had some challenges, right? But again, I think what it does is it can kind of scare some people of being in the alternative investing space, but it also then can create better opportunities to work with people. So it's very important that you have your own process, that you're doing the work, that you're looking at what really makes sense for you. And then when it comes to using retirement accounts, I think it's great that as much as you can put in a retirement account, as long as you don't need the money, if you can grow it tax-free, can be huge. Obviously, you have to pay attention to some of the other parameters, and you got to make sure you're compliant. But anyway, I hope you enjoyed this interview. If you haven't joined our investment club, I talk about it often because I'm so excited about it. We have these deals that if you haven't invested with us or you haven't joined our club, you're not even really hearing about them, right? We're not even able to share some of them. We're not really allowed to share unless you actually join the investment club. So you can do it at the link below, bronsonequity.com/join. We'll set up a call with you and we'll basically get you on our deal list. So when we have a new deal, we'll be able to share it with you, deals that provide cash flow appreciation or tax benefits. So I appreciate it. Thank you for taking the time to educate yourself. I seriously, it's so humbling to just meet people around at conferences, over the phone, different ways. Hey, I read your book, or I listened to your podcast and I got this out. I'm so grateful. It just means a lot to me. It really inspires me to keep going. So love interacting with you. Would love for you to reach out, love to connect with you. We look forward to seeing you on the next episode of the Mailbox Money Show. You've been listening to the Mailbox Money Podcast. For more free resources, articles, and videos, go to bronsonequity.com. There you can download your copy of the special report, The Single Best Investment Strategy During and After a Pandemic. None of the information shared here is an offer to buy a specific investment, and this is for educational purposes only. Consult your financial, legal, and tax professionals and use your own common sense before making any investment decisions. Thanks for joining us, and be sure to tune in next time for more Mailbox Money.